Hi, everybody. A warm good evening to all of you who have joined on this Diwali day. Wish you and your families a very happy and prosperous Diwali. Myself, Kalyana Krishnan, I am going to be the host for today evening for the virtual inauguration of Dharmasastha Securities. We'll start the program by a prayer.
गजाननं भूतगणादिसेवितं कवित्तजम्बो फलसारभक्षितम् उमासुदं शोकविनाशकारणम् नमामि विघ्नेश्वर पादपङ्कजम् नितान्तकान्तदन्तकान्तिमन्दकान्तकात्मजम् अचिन्त्यरूपमन्दहीनमन्तराय कृन्दनम् कृदन्तरे निरन्तरं वसन्तमेव योगिनां तमेकदन्तमेव तं विचिन्तयामि सन्ततम् चिन्तयामि सन्ततं विचिन्तयामि सन्ततम्
Let's move on to the next item of the day. We'll go for lighting of the lamp. We have with us the founding members of Atachi Group, Srimati Alamelu Subramaniam, known as Atachi Mami, and Vishalakshi Subramaniam. Let me call upon them to light the lamp. Thank you, Atachi Mami and Vishalakshi Mami. We'll move on to the next item of the agenda, which is the welcome speech by the chairman of Dharmasastha Securities, Mr. Sundar. Let me give a brief about Mr. Sundar. His full name is Norani Sundar Subramanian. He is a professionally qualified management accountant with over 30 plus years of experience in steering all aspects of financial analysis and management consulting. He is also the CFO of Atachi Group of Companies and the director of Finmark LLC. Prior to these roles, he was a part of Jotun Group in various management roles, and has a good exposure towards merger and acquisition. Over to Mr. Sundar for his welcome speech.
Thank you, Mr. Krishnan. Distinguished Chief Guest, Professor Ananth Narayan, owners, board members, management and staff of Ataji Group, and friends. Namaste and Happy Diwali. It is my pleasure to invite you all on this auspicious day of Diwali to the opening of inauguration of Dharmasastha Securities, a financial services arm of Atachi Group. A special invitation goes to Professor Ananth Narayan for devoting his time from his busy schedule to attend this and grace this event. Welcome, we all welcome you, sir. A warm welcome to all our friends who have joined from all over the world during this undevoted time from this festival season and day, Diwali day. Welcome you all. I once again wish you all a happy Diwali and may God bring you in your life Suraksha, that is safety, Samriddhi, that is prosperity, Sehat, that is good health, Sampatti, that is wealth, and Samadhan and Shanti, that is peace. Over to you, Krishnan.
Thank you, Mr. Sundar. Now let's move on to the most important point of today's agenda. It's the inauguration of Dharmasastha Securities and the inaugural speech by Professor Ananth Narayan. I'm sure people who all have logged in know Professor Ananth Narayan very well. Still, I will read a brief resume for the benefit. Professor Ananth is an additional director nominated by RBI on the board of Yes Bank. He is also an independent director on the boards of SBI Capital Markets, ClearCorp Dealing Systems, Care Ratings, and Dwara Research. He is a senior India analyst with Observatory Group LLC. He is a member of SEBI's Mutual Fund Advisory Committee, FICCI's Capital Markets Committee, and Kerala Infrastructure Fund Investment Committee. Ananth has 24 years of experience in banking and markets, last as MD and Regional Head of Financial Markets, ASEAN and South Asia with Standard Chartered Bank. He has served as Vice Chairman on the board of Fixed Income Money Market and Dealers Association, Foreign Exchange Dealers Association of India, and on various RBI committees. He's a BTech Electrical from IIT Mumbai and a PGDM from IIM Lucknow. He speaks, writes, and consults about macroeconomics, monetary economics, markets, and financial services. Personally, I take pride in saying that I belong to the same Norni village where he comes from. Let me call upon now Professor Ananth sir to inaugurate the DSS and deliver his inaugural address.
Uh, Thank you very much, Mr. Kalyana Krishnan, and the entire Atachi Group family. I hope I'm audible in today's day and age. Unfortunately, we have to check if the audio and video is working before one starts. I presume it is working, so I will go ahead. First of all, thank you very much to the Atachi Group and to Dharmasastha Securities for giving me this huge privilege of inaugurating your venture. Happy Diwali, everybody, and I wish this venture all success. Um, I am a professor now, and professors love to speak, so you will have to bear with me for the next few minutes. What I will try and do is cover a few personal aspects and why I was already a well-wisher of the Atachi Group and Dharmasastha Securities even before I came to know about them. Second, I want to talk about financial advisors, the need for financial advisors, and why I think we need many more companies like Dharmasastha Securities to sprout and to come about and do a good job. Third, I thought we will talk about the bewildering number of choices that we have as savers and investors, and some of the issues and predicaments we go through in deciding what to do with our little wealth. How do we grow it, etc. So I'll talk about some of those choices. I hope I'm still audible.
I think there's some problem in the link, so trying to work upon that. And this is one issue we keep facing when we do online things, because this is a huge challenge on connectivity in India. We are still grappling with that. I think most of the companies are still working on that. In fact, this is our conference room. We had to struggle for almost 4 or 5 months where we didn't have a stable connectivity here. So I think that's an issue, and I think he should be back soon. Let's have a little bit of patience. Ah, I think he has joined back. Just wait a couple of seconds. He should be on audio video soon.
Yeah, can you hear me, sir? Mr. Kalyana Krishnan, can you hear me now? Okay, great. I think I'm audible now, so I'll presume that and start again. Um, Apologies for that. I think the problem was at my end. I'm now using my phone. Hopefully, this will be a little more stable than the laptop that I was using. Um, I I apologize for the ugly background, but that's all I can manage with the phone right now. So I was saying that I will try and cover four aspects. One is why I feel kindredship with Atachi Group and Dharmasastha Securities, even without knowing much about them. Second, as I said, the need for companies such as Dharmasastha Securities, which I think is really, really high in a country like ours. Third, some of the bewildering choices that we have when we are trying to manage our wealth. And fourth, the science behind what Dharmasastha Securities can do, and I'm sure will do, to help us manage and navigate through our savings choices. And finally, because I'm a professor, I have no other choice. I have to give unsolicited advice, which I will do both to investors as well as to Dharmasastha Securities. So first, the group itself. First of all, when Mr. Ishwaran, we call him Kunjan Mama, Kunjan Anda, when he called and said, "Will you please come?" there was no question of saying no. When he mentioned the name of Mr. Venkatesh also, who's an independent director on the board of Atachi Group. There was no question of saying no when people like them call. Second, I have to admit, as Mr. Kalyan Krishnan said, I'm from Nurani. I was never in Nurani, but my father and his 5 siblings all grew up in Nurani. I feel Nurani in my blood. So anything to do with Nurani, there is always a soft spot. So that by itself is a great excuse to say, yes, absolutely, I'll be part of this. Third, the name Atachi Group, and I had the pleasure of seeing Alamelu Mami just now when she lit the lamp. I have to tell you this. So my tata, my grandfather, father's father, his name was Ayakutti Vadyar, and in fact he was a Vadyar in that Shasta temple, his wife, that is my party, we used to call her Atachi. So it was a very funny situation where everybody, grandchildren, sons, daughters, Mataponna, everybody used to call that lady Atachi, right? So to me, Atachi has a special place in my mind anyway. I was, she was the matriarch of the family, a fantastic woman. We all grew up under her patronage. So the name itself is a fantastic name, which I cannot say no to. And finally, Dharmasastha Securities. You can't choose a better name. Again, I have a very soft spot for that Dharmasastha temple in Nurani, where my grandfather had the privilege of being a pujari for some time. So all of this put together, my vote is for you anyway. Even before I know what you're doing, my vote is for you. I'm sure you'll do extremely well. You can't go wrong. I think you're ticking all the boxes. Next, I'll come to this point about the need for independent financial advisors and for people like yourself. Look, my father retired in 1989. By the way, my father is no more. He expired in 1994. He's a product of Nurani as well. He took good care of me and my sister, my mother, our entire family. We had nothing to complain about. We lived a very, very comfortable life. He retired from this company called Metal Box in Calcutta in 1989. At that point of time when he retired, he had about, if I remember correctly, about 15 lakhs worth of savings. Like most curd rice eating South Indians, he absolutely distrusted or mistrusted the equity market. For him, equity market equal to gambling, right? So he would only put money in State Bank of India or in some LIC fixed income scheme, right? He would not touch anything beyond that. As a result of that, he used to, at that point of time when he retired, get a monthly income along with pension of about 15,000 rupees per month. Okay, those days LIC used to give 12% per annum in Dharma. There were various schemes, Dhanvarsha, etc., which used to give them 12% returns. He had one house of his own. That's it, right? At that point of time, with 15,000 rupees, we considered ourselves to be upper middle class. We had no, issues whatsoever. He funded my education. He gave me a very comfortable life. We were absolutely fine. And we considered ourselves extremely lucky. He expired in 1994. Very, very independent man, very, very intelligent person. I wonder if he was alive today and still sticking on to that old invest in only in fixed income, in SBI, in fixed deposits or LIC, and earning, let's say, 15,000 rupees even today. He would be a miserable man, right? Even though he was very well off 30 years ago, today he would have been an extremely miserable man. And of course, my sister and I would have taken care of everything, but no person likes to be dependent on others, right? And especially an independent person like my father. So the need for smart investments, sometimes the smartest of us, the most intelligent of us who are fantastic in mathematics, get 100 out of 100 in mathematics, we make the most foolish decisions when it comes to our investment philosophy. We are so conservative sometimes that we simply are not able to preserve our wealth against inflation. Of course, there are some of us who go the other extreme, who take so much of risk that we squander away everything before too long. So the need for a good financial advisor who can talk some sense into us is extremely high. I'm supposed to be a markets person. I can tell you for the last 10 years, I have used a financial advisor. It doesn't matter how savvy you are about the markets. My strong advice to everybody on this call, please use a trusted financial advisor. Just as a good doctor would still consult a doctor if he had a problem of his own. He would not trust himself alone. He would also go to a professional for a professional advice. So one of the reasons, therefore, I think companies like Dharmasastha Securities is absolutely essential is exactly for this. To give, we all go to doctors for professional advice. We go to, hopefully we never have to go to lawyers, but sometimes we have to go to lawyers. We go to other professional chartered accountants for tax, etc. Likewise, for investments, we need to inculcate the culture of using professional, independent, dispassionate advice. The need for that cannot be emphasized more. Okay. Third part is, even for people like me who are supposed to track markets and we are called experts or whatever, that all that is nonsense, but we are supposed to be experts. Look at the bewildering number of investment choices that we have in front of us, starting with fixed deposits, going on to bonds, let's say tax-free bonds or government bonds, going on to corporate bonds, then going on to debt schemes of mutual funds. From there, going on to equity schemes, within which you have large cap, mid cap, small cap, all sorts of different kinds of schemes. Then you have commodities. We all have some amount of gold in home. There are other commodities which are traded. Then there is foreign currency now. We are all allowed to take out foreign currency every year, $250,000. Likewise, you can also invest or something called fund of funds, where you can invest in foreign markets from India itself. You have real estate. We all have some real estate investments, and we have funny things like bitcoins nowadays, and you can also put money in other people's businesses, venture capital, etc. It's a bewildering array, and trying to do this on your own, choosing where you want to put in money, etc., can be extremely confusing. I'll just use that point to reiterate the fact that we all need professional advice, including supposed experts who are supposed to be tracking these things. Now, how is it that companies like Dharmasastha Securities can help, and how do they actually help? I'll try and tell you some of the science behind investments, which I find kind of interesting. And let me start with one question which I would have asked students if it was a classroom setting. Who do you think makes better investors? Is it men or is it women? Okay. It's a trick question, so the trick answer has to be women. It is women, by the way, and it's not me saying it. It's not somebody's opinion. It's actually backed by research. So there was this research done by a couple of people, which actually showed, and they researched some 35,000 brokerage accounts run by men and women over a period of 6 to 7 years to see which accounts were giving a better return, how are they managing their brokerage accounts, right? This research, by the way, was by Barber and Odian, and I can forward the reference later on if required. What this found was that accounts which were being run by men, so where the man was the decision maker, they consistently produced a return of almost 1% per annum below accounts run by women. Okay, here was an interesting twist. Single men who did not have a woman in the household consistently provided a return about 1.5% per year lower than single women. Okay, and this is in the US, of course, but I think it will work anywhere in the world. By the way, the point about this example is not gender. Any research person will tell you, you cannot have a simple analysis of gender versus returns. That doesn't make sense. You need multiple variables to be looked at. But shorn of all the academic nonsense, it was not the gender which was determining the higher or lower return. What they found out when they dug a little more was that men tend to trade far more than women. And then they came with a behavioral explanation as well. What they figured out was men are behaviorally overconfident. In fact, you would say confidence, I would call it overconfidence. Men are behaviorally overconfident, so therefore they think they know, therefore they trade, and therefore they lose money. Okay. The long and short of this entire example is the more you transact, the more you trade, the more you buy, sell, shift in, out, etc., the less your return is. And women, because they are behaviorally, and again, this is backed by research, this is not my opinion, because women are behaviorally a little more cautious, a little more self-doubting, therefore they trade less and therefore make more returns. Okay. One takeaway from this, if you're trading a lot, you're probably doing something wrong, other than if you're a day trader and you're doing it for a profession. That's a different issue altogether. But for most people, the less you trade, the better. Here is another interesting question which at times comes up, and this is the question of active returns. Now, what is active returns? All of us get dozens of tips through the course of any normal day. In fact, I get, because I'm in the markets and I'm on several WhatsApp chats, and WhatsApp University gives me a lot of knowledge and gyan. Buy this, sell that, today is too high, tomorrow is too low. So the question which comes up is, what determines your investment return over a time period? Okay. Is it the choice of security, which is you chose HDFC versus Dewan Housing? You chose ITC versus Infosys. Is it the choice of security which determines the return over a long period of time? Is it the timing that today markets are too high, so let's sell? Let it come down by 1,000 points on Nifty, then I will buy. Is it the timing which determines the return? Okay. And the interesting part was, after much analysis, and there was this very seminal paper done by somebody called Brinson, Bauer, and Hood. Okay, B. Bauer and Hood. What they found was things like timing, things like choice of securities, barely accounts for 7 to 8% of the return, okay, or the variation in return. A bulk of the variation in return is purely determined by what is called asset allocation. What does asset allocation means? If you decide I'm going to put 20% in large cap, 10% in mid cap, 30% in fixed income, 20% in real estate, 10% in gold, and so on and so forth, that is an asset allocation. Once you have decided asset allocation, things like timing, things like choice of securities does not determine the actual return. It is the asset allocation which determines the return. This sounds very incongruous. Now, people who have bought HDFC versus buying Dewan Housing have obviously done tremendously better over the last 10 years. But what this research tells us is our ability today to figure out which is the next Dewan Housing, which is the next HDFC over the next 10 years is very, very low. So for everybody who chooses HDFC, there'll be somebody who chooses Dewan Housing. So to think that we can beat the system going forward is very, very difficult. Okay. So the simple point is we spend a lot of time on individual securities, individual investments. That is not what is important. What is important is determining the asset allocation, which makes most sense for us. And determining asset allocation is where a good securities advisor like Dharmasastha Securities can help you with, depending upon your age, depending upon your risk preference, depending upon your aspirations. They can design what percentage of your wealth needs to be in equities, in commodities, in debt, in real estate, in foreign currency. All those kind of questions can be brought about. Okay. So, by the way, as I said, I use a wealth advisor. I pay them a lump sum, a percentage of the total wealth that they manage. And I don't pay them brokerage on individual transactions. I merely pay them for the advice, and I encourage people to think that way. That way, their incentives are also aligned with our incentives, which is you want to maximize your wealth and lower your risks. They are doing exactly the same. They are not selling you products for the commission. They are selling you products for your good returns. Okay. So that's the second part, which I thought would be interesting. Now, when we come to finally to the point about investments, I speak to a lot of traders who are excellent traders who have had a track record of providing good returns over a period of time. So I tried to put together some of the learnings that they had to give me in terms of managing one's wealth. Three quick takeaways that they kind of provided to me, some of which I'm sure you know in some form or the other, you would have heard it. First is the power of compounding. Now, this is again something which everybody is familiar with. We know that, for instance, if you're getting a 10% return per annum over a period of time versus if you're getting a 7% return, if I remember the math correctly, I don't remember it offhand. Let's say we have a working life of 35 years and we invest 100 rupees in the beginning of our 35 years, wait for 35 years. If you're earning 10% per annum versus 7% per annum, at the end of this 35 years, I think your 10% per annum would have amounted to 2.5 plus times more than the 7% per annum. So it would be 200. It would be much more in terms of the compounding which happens over a period of time. So while my father, for instance, wanted that fixed income return of 6%, 7%, 8%, or whatever that number was, and it sounds like not very different from, let's say, a 10% that was being promised in equity. Remember that over a period of time, that difference will amount to a large number. So you have to keep that in mind. The power of compounding is very, very important. Second thing that you have to remember is you have to avoid sharp losses. Now, this is something that advisors don't tell us. They keep telling us equities is very good, put money in equities over a period of time. Equities is very good, but remember that equities comes with higher risk. If you invest at the wrong time and you face a large drawdown thereafter, you can face a real blow. Okay. If you, any point of time, even if you're earning 10% per annum, 12% per annum consistently over a period of time, if you see a 30% drawdown at any point in time, your entire wealth that you would have accumulated at, towards the end of your investment period will be down by that 30%. So, I cannot emphasize this enough. Because I said that, fixed income gives low and equity tends to give higher in my father's case, that does not mean put everything in equities. It means that put as much, knowing full well that you cannot afford to lose a big drawdown. As and when you have a big drawdown, you could face real challenges. I'm going to give you some more examples, and this is where a good advisor will tell you about these things. Here is a quiz question. Again, as a professor, I have to ask quiz questions. What do you think has provided better returns over the last 10 years? Is it Indian equities or is it US equities? US equities being Dow Jones or S&P 500 or NASDAQ, right? Over the last 10 years and over the last 20 years, what has provided a better return? Okay. Here are some surprising results. It might not be surprising for some of you who track the markets, but it was surprising for me when I saw it first. So if I remember correctly, over the last 10 years in dollar terms, you cannot compare rupee returns and dollar returns. Let's say in dollar terms, over the last 10 years, Nifty 50, our NSE main benchmark, clearly, which is at all-time highs right now, 12,700, wherever it is, it's at all-time highs. Over the last 10 years, in dollar terms, it's barely provided 2% per annum return. Okay, which means between 2009 October to now, or 2009 November to now, or 2010 November to now, it has barely provided 2% return per annum. Okay, whereas something like a NASDAQ has provided 16% return per annum. So if you had invested $100 in Nifty 10 years ago, or $100 in NASDAQ 10 years ago, that $100 in Nifty would have given us something like $125 only, okay, in the last 10 years. Whereas the same $100 going into a NASDAQ would have given something like $475, okay, almost 4 times the return that you would have gotten in Indian Nifty, okay. This goes back to 2 things. One is I told you about the power of compounding. This 14% differential, 2 to 16% differential, amounts to a large number over a 10-year period. Second thing is the point about diversification. You would have thought that India as an emerging market will do well. 2010, if you said India will do well and provide better returns than the US, I would have been in that camp as well. Yet India dramatically underperformed in that last 10-year period. However, that doesn't tell us what's going to happen in the next 10 years. And here is the switch. If instead of the last 10 years, if I took from 2000 to 2010, the numbers become completely the other way around. So if you had $100 invested in 2000 towards the end of 2000, by the end of 2010, your $100 would have become something like over $500 if you had invested in Nifty. The same $100, if it was in NASDAQ, would be worth less than $100 in 2010. You actually had a loss in NASDAQ in dollar terms. That the reason for that was 2000 was the time when you had the dot-com boom, and then there was a bust. Point being that different markets tend to give different returns over different periods of time. Okay, the whole point about diversification is exactly this. You and I can, over a cup of coffee, discuss what is going to do well over the next 10 years. Reality is we are tossing a coin. We have no clue. If you want to get the risk to be minimized, if you want to try and protect the portfolio, you have to diversify across different asset classes. It goes back to the point that asset allocation is the biggest choice that you have to make. And within asset allocation, if you're going for diversification of risk across different asset classes, your chances of having a very bad or an extreme return, either very high or very low, gets reduced. You come to somewhere in a meaningful return. So few takeaways, therefore, in terms of rules. One is the power of compounding. Second is the power of diversification. The fact that risk across different asset classes tends to get you better returns. It's still a gamble, but nevertheless, it tends to give you better returns if you have spread your eggs amongst different baskets. The third part is please avoid sharp drawdowns. Now, the third part is difficult to avoid because sometimes the markets, for instance, in March and April, the markets hit all of us without giving us advance warning. So how do you avoid that? The point is, if you are in risky asset classes, be aware you could have those sharp drawdowns, which can hurt your wealth quite dramatically. You have apologies. So the last bit that I'm going to talk about is some gratuitous advice to both investors as well as to Dharmasastha Securities. The advice to investors and clients of Dharmasastha Securities, I'm sure you're all lining up to join them. Please do not grudge paying fees for advice and for investment help. Okay, be ready to pay for advice. We are, as Indians, we have trouble paying for advice. But just as you would pay the doctor fees, just as you would pay the lawyer fees, just as you would pay the chartered accountant fees, investment advisory is a very, very tricky subject. It is an involved subject. Pay them fees. My own suggestion, don't pay them fees via brokerage on investments done. You might not like it, Dharmasastha Securities, but my preference is please pay a fixed fee on the amount that you're investing. That way, all incentives will be aligned. My advice on the second side to Dharmasastha Securities, this is a fantastic profession. You are doing a noble service of preserving people's wealth, helping them achieve their aspirations, their deployment aspirations. And it's a very, very tricky subject. Sometimes it's a thankless job. If you make money for the client, it's the client's good luck. If you lose money for the client, it is entirely your fault. It's a very, very thankless job. My suggestion to you is you're building relationships, and I saw it in your note. I'm sure you follow all of this. You are building relationships for life. I have used my investment advisor for several years now. Okay, and that investment advisor knows my Janam Patni, my Jadagam, everything he knows. Okay, he is one of my closest trusted friends. You are going to build relationships for life, which means you have to invest in that trust. Be extremely open in everything which is involved in those investments. Do not take the investors for granted. Do not assume that the truth is going to hurt them. Okay, I'll give you a couple of examples. We all know, all of us who are professional people involved in investments know this. Some of the charges that are hidden in investment products are egregious. I know of insurance products, guaranteed return schemes which are tax efficient and all that. where 25% and upwards of the first payment that the customer makes goes as commission, right? Earlier we had ULIPs which had lots of problems. Now some of those problems have gone away. Likewise, even in mutual funds, earlier there was a lot of opacity about the fact that regular funds charge much higher than direct funds, this 1% difference or whatever it is for equity funds. Even for direct funds, there used to be a lot of lack of transparency about the actual charges the fund house is charging. Similarly, the transparency about returns. We should be telling our clients what is the investment return we have managed for them against what would they have managed on their own if they were investing in very, very simple products without going through complicated investments, right? Something called alpha in investment parlance. Why go to a mutual fund, pay 2% of expense ratio, unless that mutual fund is giving you better returns, better than 2% returns, than you investing in the stock market directly? You could buy a Reliance, you could buy HDFC and get the same return. So making sure you're transparently revealing what is the net alpha, net higher return which is coming through investing through you. Even if it is lower, there will be years when you're giving less return than the index. But be upfront about it and explain what is happening in the background. Tell them exactly what you're making out of it. It pays in the long run. I know it sounds like bad advice, but believe me, being transparent, along with investors being realistic about the need to pay fees for advice, I think you can build huge relationships as long as you build this trust. Our business is entirely trust-based. Anything to do with financial services, if you don't trust me, I don't trust you, we will never do a deal in finance. And that trust you have to guard like the last, like your soul, like your moral compass. You have to guard it to the last bit, which means being completely transparent with your investors on what exactly is going on, what are they paying, what could they have got, what have we learned for the future, being absolutely transparent about it. I've given a long lecture. I'm sorry, I exceeded my time. But once again, my absolute pleasure and privilege to be able to inaugurate Dharmasastha Securities. As I said, I'm wholeheartedly behind it. It ticks all the boxes for me, coming from Nurani, part of the Attachi group, which is close to my heart for different reasons. Name like Dharmasastha Securities, and I know the people involved. I think they're excellent people. Thank you for getting into this particular business, and I wish you all the success. I'm sure you'll do extremely well. It is a complicated area. All those clients who have dialed in, my request to you, please use their services and make sure that they are transparent. And from your side, Dharmasastha Securities, I'm sure you will provide all the reason for people to trust you. And I wish you success over several years, several decades. And I hope and pray that you grow into a really large advisory services. You will be doing human service for our community and for the Indian investors in general. Thank you very much, and back to you, sir.
Thank you very much, sir. It was indeed a great speech. Shankar will talk about it next. But before that, a couple of key takeaways will be: one is truthfulness, and second is transparency. I think these two words are going to be key for this business. And your connection to Noorni has made me a little bit emotional. Let me move on to the next part of the agenda. The next part is talking about DSS, what DSS is, and what are the services DSS is planning to offer and planning to build upon. So I'll call upon the CEO of DSS, Mr. Shankar. Let me give a brief introduction about Shankar. Again, he's Shankar Noorni Chudamani. He's a management graduate with over 20 plus years of experience in the financial industry. Prior to this role, he was the state head of Geojit Financial Services Limited. During his tenure, he has been a key player in driving the company's business and has spearheaded sales, service, and distribution of financial products. In addition, he has solid experience in matters relating to regulatory requirements, risk management, and information technology. Now, let me call upon Mr. Shankar to talk a few words about DSS.
Good evening. So first of all, a happy Diwali to all the people who are attending this function. And a special happy Diwali to you, sir, Ananth sir. Once again, as Kalyan Krishnan sir has told, we are really proud to be part of Nurani. And yes, once again, it's proud to be Nurani. So moving on to the subject, that was really a great speech, power-packed presentation, and you have covered almost whatever what I have planned. These are the areas which I wanted to focus in my presentation with regards to power of compounding, with regards to the importance of advisory services, with regards to the transparency, with regards to the trading, with regards to all the kind of jargon. So that was actually my presentation, but unfortunately or fortunately, you have presented well, and now I need to, I may be a bit going here and there. Please bear with me in my presentation. So let me start by sharing my own experience. So during the early days of my career, actually, I got an opportunity to meet a successful investor. He was a senior person and he was also an ultra HNI client. So out of curiosity, I just asked him, sir, what is your success strategy? So what made you build up a portfolio like this? So he, without any hesitation, immediately he has shared me 2 principles, which he told at that time itself. Shankar, I will share you the principles, but I am sure it is very difficult. Only very few people, maybe people like Warren Buffett or something, only will be able to follow the principles. And it is none other than knowledge and patience. These are the 2 power-packed successful mantra which actually drive, and in fact, for that matter, this mantra is what has driven this particular client to identify and invest Asian Paints at 27 rupees. And now I am sure you all know what would be the investment of the client. Since then, after his advice, I consider him as my well-wisher, my guide, and my guru. And in fact, I'm so happy that he is listening to this program. And I'm sure he should also be proud about Dharmasastha Securities. So, we Dharmasastha Securities wanted to inculcate the successful mantra to all the clients who are coming to us. So now let me give a brief about what is Dharmasastha Securities and what we are into. So we are a one-stop shop providing services in financial savings and investments, offering unparalleled investment opportunities and bespoke services. We ensure responsible marketing of financial products on exclusively based on the client's requirements. We have a panel of independent expert committee members who oversee risk, compliance, business ethics, as well as data integrity and privacy. And also please note that the members of these committees are pioneers in their own respective fields. So Dharmasastha Securities has also, we also have a in-house research team. And this research team follows the principles of EIC for our own researchers. EIC means economic, industry, and company analysis. We stress more on the future growth prospects of our company as well as industry, rather than focusing on mere previous performances, financial performances. So what we do is that as far as our research is concerned, we go and personally meet the industry experts, and we used to have a discussion with them to understand the end-to-end business processes, to understand the key business triggers of the industry as well as the company. And finally, we come out with a SWOT analysis, which will give us an idea with regards to where the industry is hedging towards. As of now, we have completed 3 industry analysis, that is insurance, pharma, and banks. All these reports are readily available with us, and we will be so happy to share with all our clients upon their requests. Most importantly, Dharmasastha Securities also, as Dharmasastha Securities, we also provide psychometrical analysis of the prospective client's portfolio with no strings attached to it. So we have our own system, we have our own software, which will help our clients for multi-asset tracking. Our clients just need to key in all their investments. It is not just restricted to equities or mutual funds. Whatever investments they have made, whatever maybe real estate or gold, physical gold, whatever is there, they can key in their informations, and at any point of time, through a single user interface, they will be able to see all these reports and track them. And in fact, we have a facility wherein whenever there is any property tax or anything like that, that also they will be able to get the alerts. Prior alerts will be also provided. So today is the Diwali day. It is a very auspicious day for all of us. It is the day which symbolizes the victory of light over darkness, symbolizes good over evil, and knowledge over ignorance. That is the reason why Exchanges has started to honor this day by conducting special trading and named it Muhura trading. This Muhura trading day is auspicious for all the financial investors, and they actually start investing, and they keep it as very sacred, and even they never sell it for generations. They hold it for generations. That is the success, or that is the power, the opportunity of Muhura trading. And I am here to proudly announce that today, in this auspicious day of Muhura trading, immediately after this session, we are also going to inaugurate our Muhura trading flow. So once again, I welcome all of you for the Muhura trading sessions. Then we are very happy to inform you all that we will be conducting similar events in future. I am sure even for Ananth and Narayan sir, it is going to be a small, actually the time was not enough. His introduction alone has took half of his schedule, and I am sure all of us will be eager to hear from him with an elaborate speech and elaborate thought-provoking ideas with regards to savings and investments. So what we are planning to do is that we will be conducting similar events in future with eminent speakers on a periodical basis. So please do check our websites. Please do check our websites for more informations, and we will be updating on a regular basis. And in this at this juncture, we are also very happy to announce that we have started YouTube channel, but unfortunately, as Kalyanishan sir has told, maybe sometimes technology may overtake us. It will not plan as accordingly. I apologize for the fact that actually due to some technical glitch, our YouTube was, we were not able to go live in YouTube. But take it from us. This session is already recorded, and immediately we will be uploading this session for all our investors who are interested to hear once again, especially the speech of our Professor Ananth Narayan ji. And our immediate future projects are insurance services, and also we are going to come out with advisory services, and both we will be starting in the 4th quarter of the current financial year. Finally, as our chairman of Atachi Group, Mr. Raju Subramanian, always used to say, we derive strength from our passion of giving back to the society, and that's what our ultimate goal is. Likewise, we strongly believe, we Dharmasastha Securities strongly believe that well-disciplined investment decisions enable economic prosperity and social progress. So with this, let me conclude, and the journey towards financial prosperity begins from now on. Thank you.
Thank you, Mr. Shankar. It was great talking about all the aspects of DSS. Let me assure you, all the participants, I know that everybody will be getting restless because we are getting into the Muhurat trading time, which is 6:15. I promise you that we will conclude the session in the next 5 minutes. So just bear with us for another 5 more minutes, and then you can get into your Muhurat trading part. Now, I move on to the last but not the least item of the agenda is the vote of thanks. I would introduce our the Vice Chairman of DSS, Mr. Gopalakrishnan. Mr. Gopalakrishnan has over 30 years of experience in senior management and specializes in supply chain management and project management, business development, marketing, and sales management. He was the general manager of Maison Stainless Steel FZCO UAE, a wholly owned subsidiary of Sumitomo Corporation, Japan, and has successfully managed many high-profile construction and industrial projects throughout the Middle East, Africa, and Indian subcontinent. Over to you, Mr. Gopalakrishnan, for delivering the vote of thanks.
Hi. Good evening to you all. It's my privilege to propose a vote of thanks and acknowledge the contribution of everyone for making this event a big success. My sincere thanks to Almighty for making our first step resounding success. With His blessings and grace, we are able to make this event what it is. On behalf of Dharmasastha Securities, I extend a humble vote of thanks to our chief guest, Professor Ananth Narayan. Sir, it was truly a treat to watch you and listen, who spared time from his busiest schedule to grace the occasion with his presence. Today, we had an opportunity to hear you, and this will surely be our encouragement for us in achieving our future endeavors. Yes, following the quality, integrity, and value to the utmost. Last but not least, a big thanks to all the participants who made this event memorable, and I'm sure that all the participants would have deeply enriched with Professor Anand's speech. Special thanks to Mr. N.R. Ishwaran for helping us coordinating with our esteemed chief guest and making this event a big success. Once again, I thank everyone for your participation and wish you all a very happy and a prosperous Diwali. And we expect your continued support throughout our journey. Thank you very much.
Thank you, Mr. Gopalakrishnan. Let me conclude with a small quote, which is of our father of the nation on customer. A customer is the most important visitor on our premises. He is not dependent on us. We are dependent on him. He is not an interruption in our work. He is the purpose of it. He is not outsider in our business. He is part of it. We are not doing him a favor by serving him. He is doing us a favor by giving us an opportunity to do so. So we will definitely try to follow these principles with all our customers. Once again, a happy Diwali to all. I wish everyone best for the Muhurat trading. Stay safe, stay distant, and stay healthy. Follow all the precautions which are told by the government for you to be safe, for you and your family and your friends to be safe. Thank you all once again.